too slow. This is going to be a simple but very effective trading strategy. So let's begin with the rules of this trading strategy and what you're going. The topics that we are going to cover is the candlestick pattern that units on, the higher time frame analysis, the lower time frame analysis, and some few examples on the real. So the only thing that you need to focus on this video on the scenario is this candlestick pattern only, and on the bearish side of view this candlestick pattern here. So let me explain. So from here we can see we focus on this bearish candlestick and this bullish candlestick. So from here you see this lows here of this previous candlestick here. This is the one that we need to focus on, and then this low. Then in the lower time frame, this is what we're going to focus on the next candlestick. We're going to wait for price to trade around this area, and then we are going to look for the same pattern to enter the market to the upside. I'll even show you how to put your stop loss. The same thing applies here on the bearish side of. We have this bullish candlestick, and then we have the close here, and then we have this high here. You have to wait for this bearish candlestick to trade above this high here and then close bearish. The same thing around in this bullish point of view. We have this low and then we have a lower low, but price closed with a bullish candlestick. So what I mean is that we have to wait for the market to manipulate the previous low and then close with a bullish candlestick. Same thing applies on the bearish side point of view, is that you have to wait for the market to trade above the previous candlestick's high and then close bearish. Another thing is that from here the market will be bullish like this. Maybe let's say we have a zone around these areas here, then you see this pattern here forming. So that means the market is likely to move to the downside. So these lines here will only be used in the lower time frame. These lines will be used in the lower time frame only, and sometimes we can still see something here. You can see we have the first manipulation. Sometimes the market can still do something like this. Yeah, let's say this is a bullish candlestick. The market can still play it slow. So if the market do something like this in the lower time frame, you are most likely you won't see the confirmation to enter the market most of the time, unless if you move to the lowest frame. Let's say right now you have the daily and then you move to the 1 hour, but then you don't see a confirmation. From here, let's say maybe you move again to the 15 minute, then you see it, then you are most likely to be stopped out by this candlestick, and then the market will shoot to the anticipated direction. So right now let's move on to more examples. I'll show you. Here we have the close of the higher time frame. This is the higher time frame line. Then we have the higher time frame. From here, you have to spot a demand zone around here, a demand zone, and then a demand zone. And you have to make sure that price touched this lines here. And yes, sometimes you'll have something like this. You will have a line like this, but then the market will just reverse very close to the line, and then the market sometimes it can pass through and then make a confirmation here upside. A confirmation entry will be this kind of candlestick that you are going to use from the higher time frame. So meaning you are going to trade only using 2 candlestick patterns only. That's the behavior that you have to stand. And most of the time, this confirmation here, most of the time you'll see profit, because sometimes the market can confirm around here, then shoot to the upside and then reverse to the downside again. But most of the time you will see profit most of that if you understand this pattern properly. But if you don't, then that means it's going to be a big problem for you. The same thing applies on the bearish side. We have the higher time frame lines here. Then in the lower time frame, you will focus on price to touch this line here. You can see this structure is this one. This one, yes, it touched around this area, but then the market to the downside a little bit and then move to the upside. Then what you have to do is to wait for the same candlestick pattern that you used in the higher time frame. So in the lower time frame, you might be asking yourself a question: where am I going to enter? Let's start with this very bullish confirmation here. You can enter on the close, on the retracement. Retracement will be two of them. This is the close. The retracement is around here on the close. What I mean on the close is for this candlestick, the bullish one, and then we have another close for the bearish candlestick, and then we have the low. This is the retracement, and then this one here is the of the bullish candlestick here. So this is your entry areas. So then we have the low here for this will be your stop loss area or then you can use the zone as your stop loss. I hope you understand this one. The same thing will apply on the side. We have the open, but this one will be your first entry on price, which is here. You can enter, and then we have this close, and then we have this will be your entry. Okay, I hope you understand this part here. So let me show you another example. Maybe you can understand this very clearly. Here we can see that we have the high rim. This is the, you can go and check it out. Your analysis will be something like this. We have the candlestick, and then we have the low, and then we have the close. Then when you move to the lower time frame, this is where you'll be looking. And then in the lower time frame, you can do a lot of things. You can see we have a demand zone here, and then we have the same candlestick after price has touched the line. This line is one from the higher time frame, and then you enter the market. Then you put your stop loss around here, and then you wait for the market to shoot to the upside. This candlestick will happen a lot of times. Let me try to, you can see them very clearly. We have another one here, we have another one around this area, we have another one, we have another one here. You can see price shoot to the upside, but then it reversed. We have another one here, this one has failed, and then we have another one here. This one made few profit and then shoot to the downside, but then you can see we have 1, 2, 3 that did not fail to the upside. Okay, I hope you understand me on this one here. So let's move forward with the rules. You can pause the video right here and then read all the rules so that you can understand this trading strategy properly. So before we begin with the examples, please follow us on this Telegram, Discord, and subscribe to the channel. So let's move on. We have this one here, GBAUD. Can clearly see that we have this, we are on there 4 hours right now. We will use 15 minutes, 5 minutes. So we have the line on the close, and we have the line on the previous high. Then we have the manipulation from this candlestick here. And also I will touch on this one when we move forward with this video. So right now, because we have this analysis here, the higher time frame, you can see that we have only 2 lines. We don't have anything else. Let's move on first and see if the zone around here. We have to find the zone above the lines. And now we can see we have the supply zone around here. So that means our analysis will look something like this, then the downside. And we can also see that the market also traded below this low. We might say this is a break of structure around this area. So right now, let's see how the market played out from this area here. You can clearly see that we have the same rejection candle after the market has touched this zone here, supply. So then that means on this candlestick, you will enter the market or wait for the retracement so that the market can shoot to the. So right now, let's say our entry is on around here. We have 36 pips as our stop loss, as our risk. But then the market really shoot to the downside very aggressively. And you can also see that we have another one here. Let's say, because I know some of you are going to do it. Let's say right now you enter the market with candlestick, and then after you have entered the market, this one closes too. So one. Yeah, I know some of you are going to do it. As you can see, you are risking only 32 pips, but then this trade follows and then gives you 90 pips. So that means you are left with 60 pips. So that means you are still in profit. But I advise you to do this kind of thing, because you will enter a lot of things that are not that are not good. And you can also see another one that has already failed. That is why I prefer to use lower time frame as a confirmation. So right now, let's move on. We have the same thing here. After the market has made a huge impulsive candle on the daily time frame. So that means we are going to use 1 hour or 80 minutes. So let's start with the 1 hour time frame. Clearly see that we have some zones above the line, but this one I will consider it because price might not even touch it. It's not this one. So let's see how price behaved. You can see it was very close, but there's no click on the see something. There's nothing around here. So the market, maybe it might come, but as you can see, the market is shooting to the. So that means we have missed this trade. So you will always miss some trades if you are trading. So let's move on to another example. We have another example. It's very similar to the previous one. So we are on the 12 hours. Maybe let's say we move on to the 30 minutes time frame. We have a zone here, and then we have another zone up. It might be confusing, but there is some videos. I'll put them in the description and check them. So let's check and see how the market is trying to touch. Okay, we can see that price is still at the zone, but we are waiting for that rejection candle. You can clearly see that price touched the zone here, but then we have another rejection candlestick here. We can still enter and then put our stop loss. here our stop loss will be around this area, and then we're going to use this candlestick as our tree and then price shoot to that. So if you wait for the market to make a retracement, you are most likely to miss a lot of trades, to miss a lot. So you just have to read price in the mindset of using the retracement as if like you are trading the higher time frame, but in the lower time frame you are just zoomed in. Let's move. For example, we have two coefficients. Clearly see that here, let's say maybe right now you open your charts and see the market behaving like this. You have to read the market in, I'm not sure if I'm going to see in the right way, but let's see. We can clearly see that here we have a zone, and then we can see that the only thing that is breaking to the downside is only a bearish moves. So that means the market is still strong to the down. You don't even have to consider the previous price action because price has already done those moves. You have to focus on the current price action because that is the one that is very important most of the time. So then we have this kind of thing here. We are on the 1 hour. We have this kind of move here. So we have a confirmation to the upside, and then we have a confirmation to that. Some will enter the market here and then still profit because we are going to use the lower time frame. So then from here, you can clearly see that we have a supply zone here and the market is still breaking to the downside. So then from here, we can draw the line, first one, and then we second two, and then we will move to the time frame. Let's see, clearly see that. So for someone who used the bullish candlestick from the 1 hour time frame, he might profit from this. Let me zoom in. This is the line from the bullish candlestick. So we can see that we have a rejection here, and then you can put your buy order. So then when the market touches here and you profit from this move, you have to be very smart about it. But then sometimes it does not come here. But once price breaks, you can see we have a bullish candlestick, we have a bullish candlestick, and then we have a bearish candlestick. If price does not trigger your entry and then it breaks this high here, then you can remove your order because right now we have a new higher high. So the market might even come something like this and then trigger you and then stop you. So right now let's focus on the bearish one. We have clearly see that price touched those two lines, and then we have a supply zone here. We have a supply zone around this area. So then we have a rejection. So then that means right now for the market, you can enter on this close here and then put your stop loss above. Then you wait for the market to give you some profit. As you can see, the market pushing to the downside very aggressively. Market never stopped. So you can see this one is very simple but effective. It's very simple but very effective. So I guess this is the end of our video. I know I have put only bearish setups on this video, but please subscribe so that I can make another video showing you only setup or mix of both, because there's a lot that is going through with this video that some information will be put on. So I guess I'll see you on this one. Ciao.